Good morning. Let me do a quick update on the markets today. The current volatility that we are seeing in stock markets is unprecedented in comparison with historical bear markets. The only two markets that come even close are 1929 and 1987, and even they pale in comparison with what's happening today. Stocks, bonds, risk-free assets, commodities all have tanked simultaneously for the first time since the 1980s. So treasuries are falling at the same time as equities are falling, and so is gold, even Bitcoin. Oil, we know, fell on fundamentals because of the disagreement between Saudi Arabia and Russia. But for copper to fall so drastically, it means most productive activities will stop. What are the reasons for these declines? With the benefit of hindsight, we can ascribe two major reasons. One is the crisis of confidence. Since US and Europe are no longer following the path set by China in terms of controlling the virus, people are not confident that they will be able to control it. Even after controlling the virus, China data has been horrendous and shocking in terms of the severity. Only a quick rebound in China in Q2 can help improve sentiment. The other reason is over-leverage. Political pressure in the last decade has resulted in continuous quantitative easing and lowering of interest rates to zero even in very benign circumstances. The US government debt to GDP ratio is approaching the same levels it was after World War II. Besides this, there's leveraging even at the corporate and the shareholder level. Corporates have leveraged non-stop in order to pay dividends and buy back stock. Investors have leveraged in their hunt for yield in this negative interest rate scenario. As a result, there's leverage at the government level, at the corporate level, and even at the investor level. In the social media addicted world that we live in, with global people connections, global supply linkages, actions not only get amplified, but also coordinated across different markets. So in this sell-off, positions are being liquidated everywhere, whatever the rationale. Fortunately, it's not all negative this week. With KKR buying Viridor, Macquarie consolidating Viesco, and $25 billion of bond issuance this week itself, there are some green shoots in sight. Warren Buffett is sitting on a huge stockpile of $128 billion of cash. Any move by him to invest even a small amount would have a positive sentiment on the market. Thank you.